talk about the market volatility which intensified on the counting day. Investors looking to buy the dip into mutual funds were left disappointed. They were not able to capitalize on the market fall despite transferring funds by the 2:30 p.m. cutoff time as systems gave way and orders failed to execute on time. Subsequently, the NAV that these investors received was that of the next day when the market had already recovered half of its losses and rallied 3%. So who was responsible for that glitch? Yash is joining in for more on this story. Yash.
Well, Rima, as you pointed out, it's quite a curious case where mutual fund investors across the country, went out to buy the dip, but apparently their NAVs, their mutual fund NAVs, did not buy that dip really. What had happened is on the counting day, which was June 4th, of course, looking at the reaction, the numbers that were coming in, the market corrected very, very sharply, about 2 to 3% moves on the downside as far as the market is concerned. But mutual fund investors went out to buy the dip to get a significant amount of benefit, expecting the markets to recover. That's what happened. On the next day, the market recovered almost all of its lost ground. But mutual funds would have, investors would have thought that they would have gotten that arbitrage of that recovery. But when they saw their NAV, they're quite disappointed because the NAV figures were based on the June 5th numbers, market levels, and not the June 4th levels. Of course, they missed out on that arbitrage as per SEBI regulations. Orders which get placed, if you're paying money against a mutual fund unit, if the money is deducted and credited to the mutual fund pool before 3 p.m., in that case, the NAV should reflect for the same day and not for the following day. We've been speaking to a lot of stakeholders involved in this particular transaction, and I'll quickly take you through what each of them have to say. BSE spokesperson has said that there was no glitch on their end, which is the exchange end, and there was some lag in receiving payments from the UPI channel for a few customers. Stock exchanges sources which we spoke to, they've said that the issue seems to be on the clearing corporation level. Because of so much load of lump sum payments in terms of mutual fund units, the systems could not handle it. There was delay in reconciliation, in settlement, matching of orders, which took those orders beyond that 3 p.m. limit, and hence the NAV did not reflect for the same day. One of the financial platforms, Groww, said that delayed mutual fund unit allocation was due to delayed money for movement between banks, exchanges, and AMCs. They are working with the entire ecosystem to ensure and understand what went wrong here. What we've been given to understand from the regulator's end as well, our sources in the regulator tell us that SEBI has taken notice of this particular incident. They are of the view that no matter whose fault it is in terms of the machinery, the investors should not lose out, and their NAV should reflect for the day when the orders were placed before 3 p.m., that is June 4th, and not the June 5th NAV. What we've been given to understand is SEBI is looking into the matter. They've started the investigation. We'll have to wait and watch in terms of, first understanding where the lapse really or the default really happened, and then the penalty for the same. But one important point, the orders were almost double of, average daily mutual fund orders. And our understanding from our sources is that about 2 to 5% of the orders got impacted because of this particular lapse.
Okay, Yash, got it. Thank you very much. That's an important issue, and it was discussed at that